Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Kent P., Angel M., Mike G., and Zlatan S. Returning to the show, it's been a while. Mark Chalmers, President and CEO of Energy Fuels, the dominant U.S.-focused publicly listed production-ready uranium company. Energy Fuels is also entering the rare earth element processing business as a supplement to its core uranium focus. Energy Fuels is a uranium portfolio company at SmithWeekly Research. The company is listed on the New York Stock Exchange under the symbol UUUU, and also on the Toronto Stock Exchange under the symbol EFR. Mr. Chalmers, welcome back. And where are you spending New Year's?
Well, it's good to be back, Andrew. I'm just spending New Year's in Denver, Colorado, so not able to go too many places, at least outside the United States. So that's where I'm at.
Well, let's kick things off here, Mark, with your quick view of the uranium market at this point and what 2021 looks like for the sector.
Look, I think sentiment for uranium is improving fairly significantly. I think that there's this global realization for the importance of clean baseload energy. And I think that the incoming administration also recognizes that. On top of that, I'm very excited and pleased with the excitement that's surrounding the advancement of these small modular reactors. There seems like there are a number of companies around the world that are focused on the small modular reactor technology. And then you couple that with the issues of the supply imbalance. I think Trade Tech indicated that in 2020, because of supply disruptions and low prices, there was a delta between demand and newly produced uranium of about 70 million pounds. So you combine all those together, and I think it looks bright for the uranium sector going forward.
And Mark, where are we at Energy Fuels? Can you maybe just speak to the current, because it's been a while since we've chatted, but there's been some changes as far as cash and debt, but where are we today as far as cash on hand, the debt outstanding, and the current capital structure?
Yeah. Well, we don't have any debt, and we don't plan to secure any additional debt unless we have line of sight to cash flow generation activities. We still contain or carry about a $45 million cash working capital, which includes inventories as far as working capital. So we take a very strong position there. And that's kind of a hallmark of our company is we don't like to get down on our cash or working capital. So we have a very strong balance sheet, and we plan to continue to have a very strong balance sheet. And so we're very well positioned as the market improves, whether it be uranium or rare earths or vanadium.
I want to talk a little bit more about those segments in just a moment. With your guys' cash on hand and inventories, and the potential for cash flows in 2021, do you guys expect to raise capital in 2021?
Well, that's a good question. I mean, at this point in time, we don't have any immediate plans to raise any substantial capital, but that could change. We do have an ATM, which is very helpful and very low cost of capital for what I call kind of maintenance capital. But depending on how the uranium reserve is rolled out, and depending on how we progress with the rare earths, again, that could change things pretty dramatically. So I'm not gonna say never, but at the same time, we just have to see how the year unfolds.
Very well. And speaking of the uranium reserve, the current bill is $75 million per year to that reserve. Is there any insight on where you see those solicitations coming out? What agency will be handling those? If it's a price-only proposal, kind of sealed bid, technical proposal, do you see any indication on how they're planning on doing that?
Well, Andrew, it's fairly short on details. I think that the Department of Energy will be the main agency involved with the reserve. The 75 million is about half of the 150 million that was recommended by the Nuclear Fuel Working Group. So we think there's scope to increase that amount perhaps next year, but it is a step in the right direction. We have to get more details. And I think that one of the things that I think is key is the uranium reserve is not been appropriated to support 10 different companies. It's focused on 2 or 3 companies max. They should be companies with proven track record of production, and that should be focused on companies that have existing infrastructure, because there's more than enough infrastructure right now to produce uranium that could receive the benefits of the reserve. So, but again, we'll have to wait for the details. But I think guiding principle here, and I think it was included in the Nuclear Fuel Working Group, is it's not meant to support the entire industry, just focused on the core of the industry going forward.
Do you think that the agency that'll be doing the procurement, do you think that they'll be sending out invites to the known companies, or do you expect you guys will have to keep an eye on sam.gov for the opportunities to come out? Any indication on that? Do you think it'll probably be second half 2021 before this really starts going?
Again, as I said, short on details. The U.S. government has a long history of purchasing uranium. Most of it was purchased under buying schedules that went for several decades. It was very successful. And basically, the government just set a price that they're willing to purchase uranium, and those that could supply uranium could step up and supply the uranium. So our personal preference as Energy Fuels is just do it the way they did it for several decades, a supply agreement. So not everybody agrees on that. But for example, we already have inventories that we produced over the last couple of years, and we think that should be certainly available for fulfilling part of the reserve. Even if it's they start trying to purchase uranium in 2021, it's going to be very difficult for just about any of the companies to supply uranium produced in 2021. So, companies that have produced uranium in the last few years, during the time that, Section 232 and the Nuclear Fuel Working Group were studying this, in my opinion, should be able to sell some of that product into the reserve.
Mark, if it is a competitive bid process, do you guys believe you guys are in the best position to potentially get an award?
Yeah, I mean, competitive bid, you can define that in different ways. There are some people that push hard on the competitive bid, but some of those people are the unproven producers, and they don't know what their costs are, and so you got to be careful here. The focus of this reserve should be on long-term sustainable production from those that are involved with any of the benefits from the reserve. So there are a number of companies that have expectations of their production costs, which are probably about 50% or 75% of what their actual fully loaded costs are going to be. So going to have to be very careful with that.
Yeah, it's a bit silly that there's a few out there that still don't know where their costs are. It's laughable, really. And I'm in favor of technical capabilities, not just price. Best value derives from that, not necessarily just sealed low bid. Yeah, let's see what happens. It'll be interesting to see what they do and how they do it. Let's move on here. If you would you update on your current ownership level in the shares of Energy Fuels? And as you've seen throughout 2020, quite a bit of volatile price movements in the share price. Did you make any on-market purchases during 2020?
Yeah, my current position is building. I believe I currently have somewhere in the order of about 500,000 shares that are in different stages, either vested or unvested. That is building because I basically have certain KPIs, and based on my performance, the company awards me shares every year. So that's building. I did make some purchases this year. I think it was somewhere in the order of $25,000. I don't remember exactly, Andrew, but I have purchase shares, and I'm certainly a firm believer of seeing management purchase shares, and a number of the executives in the company purchase shares. I think, and again, I'm just going off the top of my head, there probably were 10 either board members or officers or insiders that purchased shares in 2020.
Let's talk about the potential for cash flow next year. You know, as you guys have worked through a couple different kinks with vanadium, et cetera, there's been a cash flow potential that has really been hoped for over the last couple of years. You know, obviously with vanadium first, but the market pricing didn't necessarily agree at the time. Now there is more potential for rare earth processing and cleanup contracts. What revenues can reasonably be expected in 2021? And with the existing G&A and C&M costs, can the company potentially break even in 2021?
The most likely revenue and very likely revenue is going to be surrounding the mill in 2021, and the revenue from the sale of rare earth carbonates and some of the alternate feed processing and the land cleanup that is currently ongoing with one project we have that's in New Mexico. So we believe that the mill with currently what is basically either signed up or very close to being signed up will be cash neutral, the mill itself. That hopefully will build with other sources of feed for the mill, monazite feeds and other alternate feed or cleanup opportunities. As far as other revenue, the potential, if we can monetize some of our inventories, and we have around 700,000 pounds of inventories, if we can monetize that into the reserve at a premium, currently our uranium's on the books around $23, $24 per pound, we can generate revenue. We've got about $20 million at current prices of uranium. We have about $10 million at current prices of vanadium. Same thing, if we get a price of flex up in either the uranium or vanadium prices. And then on top of that, if the price of uranium is high enough or the reserve supports it, we can go back into production at one or two of our main assets. So, in 2021, we will not, at least at this point in time, be cash positive unless we can monetize some of our inventories, but we're certainly working towards becoming cash positive. I believe probably in 2022 or so, but that can change. And as I said, if you looked at our inventory, if we're able to sell our inventories at a premium, we could easily be cash positive if that eventuates.
Well, Mark, we want you to stay hungry, lean and mean. So let's keep that going and let's get that cash flow potential up and rolling there. I know it's been a long wait, and you guys are definitely making progress on that front, and it would be nice to see more progress in 2021 on that front. Recent news: there's a deal with Chemours Company. How much per ton are you paying for the Chemours ore, and what are your expected processing total costs?
Well, Andrew, I'm not going to get into the details of our costs. The Chemours agreement was very significant, not just for us, but for the rare earths industry as a whole, because it is the first commercial monazite supply agreement in the United States for processing of monazite ores. I can say that it's very competitively priced. We're very pleased with the relationship that we're establishing with Chemours. It's a 3-year agreement. It is basically a take or pay agreement, showing the confidence we have in our ability to produce our rare earth carbonate. It's 2,500 short tons per year minimum quantities. We believe that can be flexed up over time. And so we're looking forward to flexing it up. And it also is the first monazite that I know that was going to China, and it is now going to be coming to White Mesa. So it's a first, and we think we can build on that with other monazite producers if there's another option outside of China for processing of monazite ores that contain a substantial amount of uranium in them. So the first step with Chemours, as I said, we believe It will basically put us in a position to be cash neutral at the White Mesa mill. We need more feed, and we hope to ramp that up, somewhere in the order of 4 to 5 times or greater in the next year or two. But the most significant thing about the Chemours agreement is that the contained rare earths in that agreement is approximately 10% of the United States requirements for rare earths. And we think that has got a lot of market attention. And we also think that the fact that this is probably the first rare earth carbonate that's been produced in over 20 years in the United States, it's a very significant step forward in the rare earth space.
And Mark, maybe you can give us some hint on expected processing total costs. And in addition to that, what's the benchmark pricing that people can expect to use for the processing level of the finished goods that you plan on selling out of White Mesa? And what is that current price? I believe it's in kilograms, if I'm not mistaken.
Yeah, well, I believe we're going to be world competitive. And the main reason we'll be world competitive is monazite is the best source of rare earths out there in the world. It's recognized as the best source. And I think that we're solving an issue with regard to being able to process monazite, which nobody else has been able to do. When it comes to pricing, you can go to some of the price bulletins and see what the various pricings are, at least global prices are. At this point in time, we're only going through the production of carbonates. We don't have the ability to go to the next step, which is separation. So the material, if we're going to sell it, has to go outside of the United States to either Europe or to China for processing. That is an inefficient step because you have to transport the material and then it has to be processed at other sites. We believe that it is crucial and very crucial for the company to be in a position to go to the next step of separation in the next couple of years. And that is in our plans. And with that extra step, as I said, I'm going to talk in generalities here, Andrew. We're basically break even to make a carbonate and on selling that into other markets. But if we go to the separation phase, I believe we can make very reasonable margins that are world competitive. And that's all I'm going to say at this point in time. But as I said, this Chemours agreement is a very important first step, but it is by no means the end of the steps that we're planning to take.
Okay. Once it's sold and so forth, you guys will obviously be displaying your costs at that time and also sales prices in your filings, I assume, correct?
Yeah, no, absolutely. And as I said, I just want to be a little careful on quoting costs, but it is significant enough to make the mill break even or in that order. But it turns very quickly with quantity. When you increase the quantity by, say, double or triple, it all starts making a lot more economic sense. But you really have to separate in the United States to get rid of the shipping of the concentrate to some faraway place and get the economics of scale. So it's a step in the right direction. It's a very important step. And anyone in the rare earth business that understands the rare earth business understands that the steps that we've made and taken and how quickly we've done it is remarkable. It's just remarkable. But as I said, I believe that instead of some of the other sources of rare earths like bastnäsite, that monazite is going to be the game changer for rare earth production in the world going forward. And so sites like our site in China are going to be in the best position to have the lowest cost possible going forward.
Agreed, and certainly the higher volume and the profile of that is definitely more economical. You mentioned the separation, eliminating that really silly supply chain that's existing right now, inefficient. If you guys do move into separation, what do you think the time frame is, and any idea on rough capital cost to do so at White Mesa?
Well, we think we can move into the separation step quite quickly in the next 2 to 3 years. We really have to make sure that we have more feed than just what we're currently getting from Chemours. So when we get 2 or 3 times, say, the equivalent of the current agreement with Chemours, we will move towards separation. We think that White Mesa is very attractive, not just from an operating cost perspective, but also from a capital cost perspective. We're able to utilize a lot of the existing infrastructure going forward and currently. Matter of fact, right now to make carbonate, we're using almost 100%, close to 100% of existing infrastructure. Our estimates are not engineered estimates, but we think we can probably build a very substantial separation facility for in the order of $100 million, which would be much lower than others. And we'll also look at metals and alloys in due course. So we think that when other companies are spending, $1 to $1.5 billion for infrastructure, that White Mesa's capital cost strike rate is going to be just a fraction of that. And that's another reason I'm very confident about saying that we will be very competitive in the world when it comes to cost of production.
Mark, there was an article from a local San Juan County group about potential challenges to the rare earth processing and that a license amendment might be needed from the state of Utah. What's the status on this, and does the argument have any merit?
Well, I don't think the argument has any merit, and I believe that the state of Utah believes that we do not need a license amendment for the rare earth processing of carbonate. And I think they're behind us on that because we're first and foremost processing this monazite ore feeds for its uranium. The uranium content is about the same grades as what we typically mine in the region, and we can process that economically for the uranium. So the state of Utah believes, and we concur, that is a uranium processing plant. So if we can process these monazite uranium ores, we have all the permits we need to do that, at least that first step. So we're very confident that we have all the permits required to continue on with this rare earth program. And, we'll just take it a step at a time from there, but we're not worried about there being any validity in a challenge of the facility at this time.
Yeah, I think the state of Utah still has some sanity, and as you know, you can't satisfy everybody. There's always someone who has a problem with anything that you do.
Well, and something else, Andrew, I want to comment on is, where do the environmental groups stop? Here we are talking about being a leader in rare earth production in the United States, which the products generate, magnets, high efficiency magnets for EVs, for wind generators. Look at all the positives that the ability to produce uranium and rare earths at the White Mesa mill can deliver to not just the United States, but to the world. So you got to kind of ask yourself sometimes when people keep challenging everything, all the good that you do, what is their agenda? Because I don't believe it's for basically improving the environment.
Yeah, well, look, hypocrisy has no limits. So, I want to bring out a point about White Mesa. I think people have struggled to value it. Even I would say we've been conservative in our thought process regarding the valuation and the strategic importance of White Mesa. And really, I got to be honest, the balance sheet value doesn't look right either. But can you talk about the strategic importance of White Mesa, how you might consider it to be valued? And then there's a substantial amount of goodwill in White Mesa. Can you just talk about that?
Well, it is hard to value. If you look at replacement value, it'd probably be $300 to $400 million, assuming you had the permits and the ability to build a new facility similar to White Mesa. But it's really worth a lot more than that. And the main reason it's worth a lot more than that is the fact how unique the facility is. Having the permits for a conventional mill in itself, it's almost impossible to replicate in the United States today, very difficult anyways. And having the fact that it's the only conventional uranium mill, the only conventional vanadium facility, and now has the ability to produce these rare earth carbonates and perhaps going further downstream, it's really become the critical mineral hub. So how do you value a critical mineral hub that does things that nobody else can do? But the replacement value, 30 or 300 to 400 million, as I indicated. As we continue to progress in the rare earth space, that may become, larger with some of the investments that we would put back into the facility. But I think it is very difficult to value, and I agree with you. I understand why some people have difficulty doing so.
Yeah, it's a good asset, and it's in a good location. I mean, the state of Utah, in my opinion, is one of maybe 5 or 6, maybe 7 states that have some remaining sanity in the U.S., and it's definitely in a good jurisdiction. So good on you. It's a good asset. Virginia Energy, you guys still have a shareholding there, Mark. Are you keeping in touch with management, one, and do you guys intend to continue to hold that stake?
It's not high on the priority list, Virginia Energy. That was acquired before I came back to work for the company, but it is there. We really haven't given a lot of thought recently. I know there are other companies that have expressed some interest in perhaps purchasing Virginia Energy. It's a very good deposit. It's just in Virginia, and that's the unfortunate aspect of it. So yeah, we haven't given a lot of attention, Andrew, but we will in due course. But right now, it's not high on the priority list.
Yeah, it's an optionality play, and certainly it's something that will get attention in later cycle stages. Briefly, just to wrap up on the rare earth side, Mark, speak to what your guys' goals are for the rare earth segment in 2021, and when can investors expect notable results coming out of this in 2021?
Look, 2021 is going to be a very important year for us with rare earths. As I mentioned, this initial supply agreement represents approximately 10% of the U.S. requirements. It is my goal to and target to push the production of rare earths at the White Mesa mill, maybe upwards of 5-6 times that, to be able to be in a position in the next few years to supply in the order of 50% or greater of the United States rare earths. So, watch this space. We're actively out talking to a number of monazite producers and other potential off-takers for separation or separation services. So it's very, very active right now. And we also will be talking to a number of end users in 2021, the likes of Tesla and Ford, General Motors, Siemens, and try to get on their radar screen as a viable and emerging source of rare earth products in the next few years. So we're very excited about that. So I think that investors should view us as a rare earth, but first and foremost, a uranium production company with our long history there, but emerging as a very significant player of rare earths, not just in the United States, but in the world. And the fact that we've had such a reputable group of advisors join us, like Konstantin Karyanopoulos, probably the most successful person in the rare earth business in the entire world, is still working closely with us. We have Jack Lifton and Brock O'Kelly, who also has about 35 years of processing experience with rare earths at Mountain Pass. We are in an excellent position, and we're building to that team. We are building to the team with some of the world's most foremost experts for going into separation metals and alloys. We are building this team out so no one can tell me or us that we do not have the ability to make a big splash here in the rare earth space.
Well, I suspect the Chemours agreement is really the start of this, and we've seen that pick and shovel supply announcements with companies like Tesla can really cause shares to explode. We've seen that earlier this year with some other deals that were announced. Mark, there's been apples to bananas comparisons about the G&A costs and production profiles of Paladin versus Energy Fuels. Now, as you are well aware of Langer Heinrich having operated it, and of course, the remaining Paladin assets that haven't gone to others during the partial decommissioning of the company that's occurred over the last few years. Comments on the potential of these assets and the respective teams behind both Paladin and Energy Fuels.
Well, look, I haven't, I don't know the current team that's left at Paladin. As you know, I was in charge of Langer Heinrich and Kayla Cara for about a 5-year period in that 2011 to 2015 period. So I don't know what the current status is of those assets. They sold off Kayla Cara. Langer Heinrich is still there. A lot of Langer Heinrich has been mined out. A lot of the good areas have been mined out, and I don't think people fully appreciate that. It is a good asset, and it's in a great location. Namibia is a great place to do business. Great people in Namibia. So I have very fond memories of my time with Paladin and working with John Borshoff. So yeah, they're difficult to compare, but the difference between Paladin and us is really they're a single asset company where we have multiple assets, and we cover not just the uranium, the vanadium, and now the rare earths. So it's very difficult, Andrew, to make well, here's Paladin, here's us. We're very different. I do want to say this is that I think I'm an Australian citizen as well, and I could have stayed in Australia very easily for the future and the uranium business in Australia. And I came back to the United States for the specific opportunity of becoming CEO of Energy Fuels. I only came back for one reason, and that is I believe that Energy Fuels was the best vehicle in the uranium space at this point in time. This is going back 4 or 5 years ago, and I'm still a believer of why I made that decision as the right decision. So I believe, there are other good vehicles out there in the world, and I'm not saying that there aren't, but I thought that Energy Fuels was a very unique vehicle, and it has not disappointed me at all since my return.
Very well, I appreciate that. Paul Goranson left the company earlier in 2020 and quickly joined Encore Energy, which has made some news and some moves in 2020 and is now really established as a developer explorer stage company now. Thoughts on Paul's departure and his potential at Encore?
I'm a very good friend with Paul, and we have a very good relationship with him, and I congratulate him on his new role with Encore. We've looked at and made some very difficult decisions over the course of last year, focusing on streamlining the fact that the business was changing somewhat with the addition of the rare earths. There's some succession considerations there, but Paul and I have an excellent relationship. I have a huge amount of respect for Paul. And as I said, I'm very pleased that he's CEO of Encore, and I wish him well. But we do continue to talk on a fairly routine basis, and we're very good friends. So look, I think that when you're looking at any of these companies, you have to be dynamic with what's evolving over time. But at the same time, I'm trying to provide a succession plan for the numerous young professionals in the group, giving them opportunities, and I just have to look at that picture holistically as we go forward. So, good luck to Paul, and I look forward to my long friendship and relationship with Paul.
Paul's a good man, and good on you guys both, because I know he's been adamant about this, as well as some other folks, including yourself. But the wisdom transfer that needs to take place in this industry is very, very important. And there's not a lot of good people that are capable of carrying the torch along. And as we all get older, I think that continues to be important and is a key piece. So I appreciate your guys' efforts on that front to mentor and bring in quality talent, which is, quite frankly, lacking significantly in the entire natural resource sector as some of these talented management teams age. Just briefly on the ISR operations for a moment, Mark, how does this slot in? And when the price is right, what is the first asset to restart on the uranium side? And what is the priority sequence of operations ramp up for the company, including the ISR portions?
Our best uranium production asset is Canyon. It's the lowest cost and the quickest to market in terms of quantity and cost of production. But followed by Alta Mesa and Nichols Ranch. So there's a lot of things that would come into the decision what to start, restart, and when, And does it require one project or two projects or three projects? You want to run these projects at fairly reasonable scale to get the economics of scale. So it depends on, what the opportunity is, how much uranium you're going to require per year, and then go from there. So we pretty much will back build based on the requirements. But you can kind of think in terms of Energy Fuels having the capability to get up to, if the market is there, a couple million pounds quite quickly in the next couple years. But we can move quicker, faster than others because we've spent more money on a lot of our assets. A lot of people will, if they're lucky enough to have an asset, and most aren't lucky enough to have an asset, you have to spend some money to keep these things in good standing. And we have kept our projects in good standing. So as I said, it's hard to say what's coming on first without knowing exactly what the requirements will be and what the pricing will be.
Understood. That makes sense. Mark, we have another question that came in, and follow with me here for a moment. First, for our audience, you can use CDAR to look up the filing history to understand the historic events. But October 2013, the company did a 1-for-50 share consolidation. In March 2007, it had about 47 million shares outstanding between then and 2013. 3 large transactions took place for Titan Uranium, Strathmore asset purchase, and of course the big one, the Denison merger, resulting in about 700 million shares being issued for those various assets through that time period. And then there were about 948 million shares out prior to the consolidation in 2013. Then you factor in the events since, and of course the continuing dilution through the bear market. And I think this question may have come from the UR Energy slide deck that essentially has some claims about dilution for US peers. Not factoring in some of that dilution had provided key value add assets that the company has today, like White Mesa. If my math is correct, the company had about a 12 billion market cap Canadian at some point during 2007. Maybe you can just comment on this, and what are your thoughts on the share structure during this period and the company potential during this cycle?
Pointed out correctly, a lot of the dilution with Energy Fuels, if you go back, Energy Fuels was just a name and a very small company, and it grew its position by acquisition. So there was a lot of dilution when you look at the acquisition of the Denison assets and some of these other assets. So and that was a big source of the initial dilution of the company. Now, over the last couple of years, we've taken a position to continue to have a strong balance sheet and pay down our debt. Now, that is a position that a lot of other companies have not taken. Okay, but at the same time, we've been out there trying to do things that are company changers in terms of things that we had in our control to try to make game-changing decisions that do cost money. Now, it's real easy to sit at home and do nothing with some of these companies, not spend any money on drilling, just pay overheads and have low dilution and low burn rate. We didn't take that approach. We continued to do value add, and Andrew, you certainly remember where we went into vanadium production. We did that very successfully. We delivered what we said we'd do. Our costs were quite reasonable and below what we had expected, but the market didn't support it. So that was a game-changing exercise that we spent some money on. We didn't get burned on it in a huge way, but we did get burned to a certain extent. Now, at the same time, rare earths is another example where we're taking the company in what we believe is a game-changing direction while still maintaining our core assets. That costs money. Other people haven't done a lot of anything. So, we're a different company. And I also think you're aware of when, in particular my past with Paladin, I saw what happens when you get over leveraged on debt and you're not able to meet those requirements. And that is a taste that I've taken with me to Energy Fuels to make sure that we maintain a strong balance sheet, because even though we're aggressive, we're not reckless. So I think that's a differentiator. But I think that the slides that people provide that say, oh, look, Energy Fuels is just a dilution machine. You have to go back to the origin of Energy Fuels with all those acquisitions and the position it put us in right today and going forward. I also want to say that we have had the best share performance this year of any of the North American uranium companies, and we also now have the rare earths. So, we spent money for the future, and that's the way people need to look at dilution. But we are conscious of it. Obviously, we're very conscious of it. We want to limit dilution as much as possible, but we are working on the optionality of not just the uranium space, but all these other aspects of our business plan.
Yeah, lots of stuff there to cover, Mark, and good points. And I would just point out that there's been dilutive value creation that's happened that is actually, attributable asset improvement versus dilution for the sake of a paycheck, and also asset acquisitions for the sake of acquisition, marginal asset. They have some optionality, et cetera, but I think that there's a very fine line to how you approach that. And then to the over leveraging of Paladin at the time, we get a lot of nasty emails about that, particularly back towards Mr. Borzoff. The fact is I don't know if people don't have their heads straight, but when you look at that, most companies lost 90% of their value from 2011 or whatever, Fukushima, all the way till 2016. So 90% loss versus a bankruptcy to me is a rounding error. I think people got to pay attention to the cyclicality of the sector, one, and the fact that this type of activity and this type of over leveraging will happen again. You want to be on the right side of the trade. And so, any comments on that are welcome, but I think that that's also a key point, that you guys have also acquired assets through these years. And again, I encourage the audience, go back and look up Energy Fuels on CDAR and you'll get decades of filings, and you can spend the next 3-4 weeks going through them. I encourage people to do that because that's what we've done. Any comments there before we move on?
Yeah, absolutely. I've been in this space for 45 years, and I've seen the cycles in this space, and I've seen how brutal they are if you're not prepared for an uptick and a downtick. You got to manage the upside and you got to manage the downside. The Paladin experience was very unfortunate. John Borshoff's a very good friend of mine. That is the only company that basically built new projects and did material production. We were producing around 9 million pounds per year at the time I was there. And that was about double the entire production in the United States, 2 times the US production. And it cost money and it cost new capital. And it wasn't free and it wasn't cheap. So look, I have a healthy respect on looking for sustainability, but also not gambling all the shareholders' money when it comes to over leveraging. So I'm going to try to strike that balance. And I've literally looked back on the 5 or 6 world leading entrepreneurs that I've worked with in the uranium space. And I try to take the very best that I learned from them. And I also try to take the things and the mistakes they've made and try to put Energy Fuels in the position to have a long-term sustainable strategy without putting the shareholders at undue risk when you have ability to manage that risk.
Just remind the audience again, everybody was a uranium bull in 2007. I mean, everybody couldn't see what would ultimately become oversupplied market. And it's not just uranium, it's copper, it's gold, it's everything else. It's zinc, it's the same thing, rinse and repeat. And once you understand that, all you have to really get is how to get on the right side of the uptrend and the right side of the cycle. The rest of it's irrelevant because, trust me, the pain is going to happen again. We saw Kinross offload gold assets that were amazing during a bear market because they needed cash. Now those assets are in other companies' hands producing lots of free cash flow. It's the same thing over and over and over. And so, the audience has got to get that. And to your other comment, back to the vanadium, I suspect at this point you have or are in process of setting up a reasonably easy way to offload the vanadium inventory that you guys have built when the price is right. And I think that makes a lot of sense. So the vanadium delivery made sense. You guys just haven't realized the sale yet, but the price will move again. And you guys, I suspect, have a way to pull the trigger and exit out of that at a nice profit when the time comes. Lastly, just before we wrap up, you brought up another question that came to mind as you were talking. Mergers and acquisitions within the U.S., if you'd like to speak globally, certainly welcome to, but what's your view on M&A in the U.S., and do you think that's something that should be looked at today versus later stage in the cycle?
Well, look, I'm never going to say never that we won't consider acquisition of other companies in the United States. But I also have to say that I think our company is asset rich, and you'd be aware that we've been working on divesting some non-core assets that we have that we just don't have time to focus on. And when I say non-core, they're non-core for us, but frankly, they're better than probably 60, 70% of the assets that are out there in the United States that people have. They have a production history. They have cost structures that are equal or lower than a number of other companies that are touting low cost. And they're permitted and they're ready to go, and we'll offer those with the milling agreement, but we just don't have time to focus on it. So right now, one of our issues, Andrew, is just pure bandwidth. And we only have a certain amount of things that we can focus on, like the existing assets, our core assets, the uranium, but the rare earth sector that we're focusing on, and some of the other things like the land cleanup and vanadium. And we just don't have the bandwidth to think bigger at this point in time. Now that could change, but we've also been cognizant of the fact that if you acquire another company that is also negative cash flowing, that just adds to the negative cash flow unless the market is ready to go back into production and it is quality assets. So again, it's a balance. You have to look at it holistically. We're certainly not short on assets right now, and we got a lot on, and I'd rather do a few things very well than do a lot of things poorly, and make sure we give the proper attention to the exciting assets that we currently own, 100%.
Yeah, a lot of points, a lot of factors to it, and it's walking a fine line. So I agree. You guys are, in our view, the best positioned company from a production ready standpoint, producer stage company in the U.S. Obviously, there's other options for folks looking for leverage with explorers, et cetera. But I think Energy Fuels has got the king position in the U.S. Well, wrapping up, Mark, why should potential new investors consider shares at these levels? The company has about a 600 million market cap U.S. What would you say to them at this point?
Well, we have had a nice rebound. If you have to almost kind of split us a bit. If you look at the rare earth side of the business, you've got Mountain Pass that has a market cap of north of $5 billion US. If you look at Linus in Australia, an established rare earth producer, it's got a market cap of $3 billion US. So on the rare earth side of the equation, if we're at say $500 million and we're building the story rapidly with the business plan of starting off with monazite, known to be the lowest cost, best source of rare earths in the world, and we're doing what China is, but in the United States, that should give people a belief that there is a lot of room to keep going in the rare earth space for our company. And then if you look at the uranium side of things and you look at us with regard to our peers, and you look at our valuation, even at that $500 or $600 million, where some of our peers at 350, 400 or whatever, and you look at the assets we have and the history we have and the fact that we've produced a third of the U.S. uranium over the last 15 years, you can come up with an equation that says that we are still undervalued. And we have a lot of upside, and we have more upside than our peers that don't really exist, as I said, because they don't do both things. But that's the argument for investing in Energy Fuels today for the future. We are effectively focused on those two spaces, first and foremost uranium company, but we have huge growth opportunity in both.
Yeah, and the valuation can certainly climb from here. And if anybody's done some basic math and some basic net present value work, they can find out that it's pretty obvious that things can move higher. And good performance and moving forward here, and looking forward to seeing what the company can generate and do in 2021 as you guys continue to grow the company. And who knows, maybe you guys will balloon in comparison to your U.S. uranium peers to where the rest of the sector in the U.S. looks quite small. Well, Mark, any other comments before we go? And I just want to give an opportunity here, best way for the folks to reach out to the company.
I'm always open for a phone call if somebody wants to call me directly. You know, as I just explained, I think that both aspects of the company, not even including the vanadium, are billion-dollar opportunities, both sides, the rare earths and the uranium. So lots of room to grow. You know, I've got, and you know this, Andrew, I've got a lot of experience in this business, and I'm trying to deploy that experience in a very focused and smart way to create value for shareholders. But this is probably one of the most exciting times in my entire career, and I'm committed to generating substantial value for all those that want to come along on the ride. So let's watch 2021 as it unfolds. I think it's going to be a very exciting year for everyone.
Mark, always a pleasure. Keep up the efforts and best of luck in 2021.
Thank you, Andrew. My pleasure to catch up with you. Thank you.